Hi, welcome to the Market Alert for Friday, 24th of May 2019. So yesterday in the pound, finding a bit of support as it looks like May is going to announce today that she's going to be moving on, according to the news out late last night. This had a positive impact, as you would expect, on the pound. You can see early yesterday the market lower, and then eventually we made our way back up and traded up to the 200 bar moving average, where the market found resistance and then started to trade back, and also the DP level there as well. You can see market just trading above this now. If she does give notice today, then you can expect the pound to move higher, and then of course all of the shenanigans and the fun begins, and who's going to actually replace her. So we'll just have to wait and see. And of course over the weekend we've got the results of the European elections. I was out assisting on these last night in getting the boxes in and things. Cousin who's got the contract for the logistics of it. They're all locked away until Sunday, not allowed to count until Sunday, as it could influence the Europeans, because they don't vote until Sunday. For some unknown reason, we vote on the Thursday, and they at the weekend. Anyway, that aside, news today, not that it's making any difference. We've got a few bits and pieces out. Retail sales for the UK and core durable goods for the US. But this news, as I've said before, is ignored, to be honest with you now, as the markets have developed their own patterns based on plunge protection teams and Trump tweets. And we saw this yesterday with the Dow moving lower. It went straight through the 76% retracement, straight through the 25,555, and then stopped at the 76%. It also went through the 200 bar moving average. But as soon as it hit the 76%, it managed to rally back. A very interesting article here that is well worth a look at. Crude, credit and yield curve collapse, the stock short to soar 4-year highs. And as you go through this, you will see all of the relevant charts. You've got crude oil crashes to 57, its worst day of 2019, and the stock market. There's one I want to look at. There's a lot of charts in here, so I just wanted to bring your attention to. Here we go. This is what I was after. Of course, it wouldn't be American free markets without a panic rescue bid on headlines whatsoever into the close. And this is the pattern we have seen. The biggest buy program in over a week at 3:20 p.m. Eastern Standard, after the biggest sell open since January. Again, just to bring the market back, the Dow closed below its 200 MA. This is in an intraday, not an end of day. Small caps collapse. The biggest drop the biggest 2-day drop is the most shorted stock since December 24th lows. We'll go past this one. There was right, is this before we leave equity land, this stunning chart from Bloomberg strategist Cameron Kreis exposes the odd regime shift of the last few weeks. Day after day we see overnight selling pressure, only to be bid back, and this is something I've spoken about in the market alert, how the market would rally back. It'd be down in the pre-market, in the futures market, and as soon as the cash market opened, you could see prices move higher. It says one could be forgiven for thinking the trade war is being played out between, and get this, the plunge protection team and the national team, battling to show how trade tensions are not affecting their stock markets. Think we're crazy? And as it says here, the US stock markets are sliding as investors fear over China-US trade war. The real situation could be even worse. The only room left for manoeuvre is the leaders of the two countries still to maintain personal respect for each other. So yes, interesting to see how this is panning out. whilst the market has this new sort of pattern, except for yesterday, where it continued to move lower from the open. It was been fairly steady in the pre-market, down 100 points there, and then it escalated to the downside there, which you can see below the 200 bar moving average. Plenty of trades on the short side there. The market already having given up 400 points in its range, then found some support. And as there's two patterns in this market, you either sell off in the pre-market and rally in the main market, as you say, the national support team coming in against the real sellers on the overnight market, or the opposite, where you get the market down, which is the general pattern that we've seen for a long time, where the market will move down, and then you get the plunge protection team coming in late on to bring the market back. This has been the most favoured strategy for a long time, but the last few weeks, as noted in the market alerts, I spotted this a few weeks ago that this new pattern had evolved until yesterday, where this was broken. But you can see how they've brought the market back at the moment, and prices moving back to the upside there. So just a reminder there in the Dow, and you can see also this price action where it comes off the lows is usually consistent with the market trying to move back to the upside once more as well. On other news, before I move on, let's just have a look at the implied volatility. This going up to 1634, no surprise given the surprise drop, shall we say, yesterday in the markets. And also the other thing to keep your eye on is Deutsche Bank as well. Yesterday, 723. This is the dollar denominated Deutsche Bank chart now as well, so you can see what's going on in as far as Charles Nenner's forecast and prediction of the 640 level. It's not euros, it's dollars. Yesterday put in a new low, which you can see, and also yesterday there was the shareholders meeting as well, as it says here. This is obviously tongue-in-cheek, but then may not be. This is how close to collapse Deutsche Bank is in one photo. You have to scroll to the end of this. It was a shareholders meeting yesterday in Frankfurt, and it was quite funny. One of the financial journalists tweeted this photograph and said lunch, and I mean, it's pretty grim to say the least. Frankfurter sausages, I don't know whether this is egg or probably sauerkraut, and a bun, so a bread roll. So yeah, that shows you how bad things are getting at Deutsche Bank when the shareholders meeting is serving up really basic food there. And one other thing I actually wanted to show you in this before I move on to Bitcoin was a brilliant chart actually. It's a bit like the Baltic Dry Index, but this one's just for household appliances, which I will find in just a second. I'm probably going the wrong way, aren't I? Yep. As ever. And this is a very interesting chart because this shows that the consumer slowdown is real as well, and obviously why we're seeing high street shops closing down. Of course, when you want it, you can't find it. By the way, the yield curve has inverted once more as well. The 3 to 10 month spread. Again, this is a recessionary indicator. Of course, I can't find the chart when I want it, but it's in this article. Just go to the end. I'll say there's an awful lot of charts in this article, which is a very, very good article. Here you go, found it. Yeah, finally some food for thought from Gluskin chefs David Rosenberg. Domestic shipments, all major home appliances. This is for the US, and you can see we are back down. Just move this a bit higher so you can see down, heading towards the 2010, 11, 12 area there. So a real slowdown in the purchasing of home appliances in the US as well. And whatever happens in the US generally finds its way over to this side of the pond at some point. Okay, and then finally, Bitcoin managed to rally to the upside yesterday. We've still got these lower highs that need to be taken out to move back to the upside, sideways in the 4 hour, and a bit of movement here in the intraday late on of two trades that didn't go anywhere, and then we see the market moving back and eventually breaking through convincingly with new buying to the upside there in the latter part and the overnight session, but quieting down overnight. Bit of a sideways move going on there at the moment, bit of a downside channel. The 200 bar obviously is going to be crucial, as is the DP level, which we see here as well, so keep an eye on that. And with that, I will call it a day. It's bank holiday Monday in the UK. I'm sure it's a US holiday as well. Let me just check this. I'm sure the US markets are, I know there's one in the 8th, it's either the May one or the October one. Yeah, it's Memorial Day in the US. I think the stock markets are open for Memorial Day, but all of the bonds are closed. So just keep that in mind as well. I'll be back on Tuesday morning. Have a great weekend. If there is anything to report, I will let you know. Keep an eye on Deutsche Bank as well, and what's going on with the patterns as far as the Dow is concerned as well. And also keep your eye on the ball for an announcement from May that she is going to give a date when she's going to clear off. And European elections Sunday as well. So a lot happening over the next few days. Okay, that's it. As ever, thanks for watching. See you in the next one.